Welcome to Talk Tickers. You ever see a company report great numbers and the stock just sits there? It's a classic Wall Street puzzle, and that's exactly what we're digging into today with Ball Corporation. We're breaking down their Q3 earnings from November 4th.
All right, let's get right into it. Ball came out with a solid beat on sales, they hit their earnings target, and the stock, it pretty much yawned. So what's going on here? We're going to unpack the numbers, dissect their strategy, and really figure out what the market is thinking, or maybe what it's missing.
Okay, first up, the headline numbers. Let's see what the quarter looked like on paper.
So, revenue landed at a really strong $3.38 billion. And get this, that's a 9.6% jump from the same time last year. That's some serious growth.
And it wasn't just a good number in a vacuum. It was what we call a top-line beat. Basically, they brought in $60 million more than Wall Street analysts were predicting. That's a huge green flag.
Then you look at the bottom line, right? Their earnings per share came in at $1.02. Now, this is the comparable number, which just means they've smoothed out any weird one-off items. And that number, it was right on the money, exactly what everyone expected.
So, let's put it all together. They beat on revenue and met on earnings. That's a textbook beat and meet quarter. And with global shipments up almost 4%, you can tell people are buying their stuff. Everything looks good, right?
So the numbers look solid, but what's the story from the folks running the company? What's their playbook?
The big theme from the call was all about execution. Running a really tight ship. They're focused on keeping costs down, making their factories run smoother, and getting cash back to shareholders. And all this while still promising to hit those pretty ambitious growth targets for the full year.
And you really got to listen to the tone here. CEO Dan Fisher's closing words, this wasn't just your standard, boring CEO speak. He sounded genuinely confident. Like, hey, our plan is working, and this is just the beginning. It's a message that their strategy is really starting to pay off.
And that strategy he's talking about, it's not something new. It's actually part of a big, multi-year plan to simplify the whole company and just, double down on what they're truly good at.
Just look at the moves they've been making. Last year, they sold off their huge aerospace division. This year, they're out of the aluminum cups business, and they've scaled back a joint venture in Saudi Arabia. See the pattern? They're shedding everything that isn't their core moneymaker, global beverage cans. It's all about focus.
Okay, so the strategy is clear, they're executing on it, the numbers were good, which brings us right back to that big question. Why did the market just kind of shrug?
First things first, people were definitely watching. Don't let that tiny price move fool you into thinking nobody cared. Look at the volume. Nearly 5 million shares traded hands. That's more than 60% higher than normal. The market was absolutely buzzing about this.
But here's the crazy part. All that action, all that interest, and the stock only budged up 1.5%. And if you zoom out, the picture gets even worse. The stock's still down nearly 20% over the last year. Ouch.
So what gives? It all comes down to what we're calling the guidance wall. Management stuck to their guns saying, hey, we're still on track for 12 to 15% earnings growth, which sounds great. But when you do the math, that number was just a tiny bit lower than what the most optimistic analysts were hoping for. And in this market, that tiny gap was enough to hit the brakes on any real excitement.
All right, so we've got solid execution, a smart strategy, but a picky market. So where does that leave us? Here's our take on what's next for Ball.
Look, we expect them to keep firing on all cylinders into Q4. You've got the holidays, plus they're huge in booming markets like energy drinks. Now, the stock price, it'll probably be stuck in a bit of a rut for a little while as Wall Street chews on that guidance, but the business itself is strong, and with the company buying back its own stock, there's a pretty solid floor under the price.
So here's our final call. We think the market is getting hung up on a tiny guidance detail and completely missing the bigger picture. This company is in the middle of a strategic pivot that is working. The business is getting better and better, and we just don't think the stock price reflects that yet. For that reason, we're initiating with an outperform rating.
This is not financial advice.